You're saying it's an essential part of a portfolio if it is well diversified. In fact, we did have we had Peter Hambro in the last week, and he was saying you should always keep 5% in gold. Is that the sort of levels you were thinking too?
We're looking at about 2 to 10% as a strategic holding of gold, and it's been proven that these range 2 to 10% are actually can enhance your portfolio result. So 2 to 10% each, based on whatever they find suit. That's the, I would say, common wisdom.
Okay, but does it mean you have to hold the physical stuff? This is the point. And if you say yes, well, you're bound to say that because you do store gold as well, so you'd be talking your own book. But, I mean, you could buy the ETF, for instance, couldn't you?
Right. So, again, it depends what's the idea behind it. What's the rationale behind buying gold? If you're looking strategically, you're looking long-term, medium to long-term, there's no parallel to physical. Why? Because it's real asset. It's there all the time. There's no counterparty risk. And you can have access to it at any time. It's not a financial product. If you're looking on a short-term trading, like we saw, people gamble in the market or speculate, ETFs are good enough. But bear in mind, gold is a safe haven. If in times of trouble, you may be locked out of your paper gold holdings. And it happened before in other products. After Brexit, the biggest property fund in London, in the UK, wouldn't allow redemption for 30 days. Now imagine you hold gold as a strategic asset for a rainy day or for a financial crisis, and then you're locked out of your holdings.
So and you like the gold stored with you, of course, naturally, wouldn't you?
Naturally, yeah. But there are other companies doing it as well.
Okay, Joshua, on a more serious note, but we see this rally. It's up to 1,420 today. It's a bit of a fluctuation taking place, and going above 1,400 was actually key, not particularly because it's a resistance or support level, but just simply a psychological one.
I agree. Yeah. So we saw, and we saw what happened, and it happened actually last day, I think the last day of May, first day of June. And it started, I believe, when Trump actually tweeted against Mexico about imposing tariffs in the battle against immigrants. So what we see gold going over 1,400, factoring in the trade war and its effect, factoring in the tension in the Gulf between Iran and the U.S. and Saudi Arabia, factoring in the Federal Reserve May dovish approach to interest and generally growing pile of negative debt in the market. So all this brought us over of 1,420, 1,430, went down a bit, but I believe it's all factored in.
Joshua, I've got this chart showing actually what's been going on with the ETF market and how they've been buying gold. This is it there. You can see this is a tactical gold game, as it were. We've had, 107,000 ounces of gold being added to ETFs in the last trading session. It brings the year's net purchases to nearly 2.9 million ounces of the stuff here as well. So you can see that. So this is becoming more and more, I guess, popular is one thing, and the other one is popular for a reason.
Yeah, so you're talking about gold or ETF? Gold is popular.
Well, gold and the ETFs.
And the ETFs are an easy way into the market. So you don't need to be a specialist. You can do it online. You can do it in many ways. It's quite easy. Again, our concern is that they're not backed 100% with physical gold, and that's where the concern of our clients is. Yeah. That's why they move to physical. They say, again, if I need it, it's not 100% backed. I'd rather have my own holdings held directly by me with access 24/7 rather than do it through a financial instrument.
Right, Joshua, okay, let's get to your targets there, because I think you said you would be surprised if you see gold going up above 1,450 the ounce.
At this point, yes, because what we saw, again, the risks are factored in. So we broke the 1,400, as you said, psychological barrier. We're over there, but we need to wait and see what's going to happen in Japan. Xi Jinping, President, and Trump.
Exactly, and that's my next question. What are the various scenarios that you've worked out of this G20, and what's the effect on gold?
So I think from what we're reading, it's hard to anticipate both leaders, right? So what we're thinking, it's bad for business for both countries, right? So they'll try to move forward in a way, probably at least agreeing to halt tariffs and resume talks. What we will see, in this case, we'll see gold going back, I think dropping around the 1,400, maybe slightly below 1,400, maybe slightly hovering above 1,400, and that until it's clear what's happening on that front. But don't forget, we have other things on the agenda. We have Iran, we have President Trump meeting. We forgot about the Russia-U.S. tension because we have other issues on our mind. We still have the negative interest rates in some countries and the Fed. So immediate thing is let's see what's happening between President Xi Jinping and President Trump. It may go down 1,400, maybe slightly below, and then it's Well, let's see what then.
Fed also comes into this with more interest
yeah.
rate cuts, and you get real rates perhaps becoming negative at some point or the other. No, with that in mind, I mean, gold is an unyielding asset, does not yield, but I suppose if you're getting negative yields, it then depends on the price. And if you can be confident the price remains that, then sure, diversify into gold. But
right, but you know, gold doesn't provide yield, but if you look at the performance on long term, it's not too bad. I mean, if you're looking, let's say, 10 years, last 10 years, gold did an average almost 6% a year. So it's not bad. We're not saying it's a great investment.
Joshua, very quickly, Bitcoin, cryptocurrencies also had a massive run-up at the same time as gold had its run-up as people look for havens. So quite counterintuitive to think of it as a haven, Bitcoin, but it has done extremely well, even though it's come back a bit.
I think...
Very quickly?
Bitcoin is where people either trade short-term, very quick speculation to gain money, quick in, quick out. That's one thing. Second, they want to park the money outside the financial system, at least for a while. They're afraid for a crisis. They're afraid for other...
Surely gold could do the same thing.
Exactly. That's why they say cryptos may be the new gold. Of course, I don't think so.
There's no intrinsic value to gold, as there is no intrinsic value for Bitcoin. But actually, the intrinsic value for gold has been the fact that it has been a store of value for so many centuries.
For 3,000 years.
Yeah.
And Bitcoin not. And what we saw, and we saw it in 2018, that is a good example on whether Bitcoin is a store of value. So in 2018, all the markets went down, right? So from S&P, about 7%. Gold went down the least, around 2% down. Bitcoin went down 80%. So if you're looking at the last quarter of 2018, when the markets were going down, actually gold kept your money safe. You lost your money on Bitcoin. So Bitcoin is good if you want high risk diversification, but gold is safety.